But we begin with the staggering rate of inflation.
That's right. Consumer prices are climbing at a record pace. The Labor Department reports prices were up 1% last month and 8.6% year over year. That is the highest 12-month increase in more than 4 decades. The rising cost of food and energy prices were both major factors. Dion Rabouin joins us now. He's a reporter at the Wall Street Journal. Dion, welcome. Thanks for being with us. So these numbers, I don't have to tell you, are startling, but of course, Americans are already feeling it. What do these numbers, though, tell you about the state of our economy?
Yeah, look, they don't say a lot of good things about the economy and, in fact, say a lot of bad things. And the biggest picture here, the biggest takeaway that I would encourage folks to look at, it's not about the number itself, it's about the trend. The biggest thing we learned this morning is that inflation did not peak in March when the CPI was 8.5%. Inflation actually rose higher than that this month. So just about everything we had baked into this narrative for the continued growth of the U.S. economy basically has to be thrown out the window right now because inflation could still be moving higher. We could reach levels we haven't seen since 1980, things like that. And that's the big worry. The economy was expected to continue to grow. The Fed said we can engineer a soft landing, but all of that was really predicated on inflation having peaked in March at 8.5% and expected to cool down, getting down to about 7% this month. None of that is happening. So now we're back to the drawing board, kind of back to square one when it comes to the Federal Reserve, the president, and other folks who are trying to really rein in inflation.
Yeah, I remember the inflation of the 1980s, early 1980s. Yeah. So the Fed, in trying to sort of get ahead of this accelerated escapade here, raising the interest rates, it has signaled it will raise rates again. Is that part of the ongoing strategy?
Absolutely, it has to be. And I talked about it on the live stream I did this morning. I do a live stream for the Wall Street Journal. And one of the biggest pieces to take away from this morning's report was, like I said, the Federal Reserve is now back to square one. They said that inflation last year was going to be transitory. It would just sort of magically go away. They're saying this year, okay, inflation has peaked in March. Now it's going to come down. We can, get to work. All that's out the window. Inflation's not transitory. It did not peak in March. So it's going to be pernicious and stick around probably longer. And it's probably going to be higher. And you saw that throughout the market this morning with bonds, with stock prices, with commodities, copper, oil, gold, across the board, all reacting like, okay, inflation's going to be here. And you know what? There is a larger and growing risk for recession. So Fed Chair Jerome Powell is going to have to come in and reestablish the credibility of the central bank at the meeting that's happening next week. He'll have a press conference, talk to the media on Wednesday, and he's really got to convince Americans that the Fed has this under control. And that might mean raising rates by more than expected, putting back on the table a 75 basis point increase, which is 3 times the rate that the Fed usually raises at, and really just saying, okay, look, we've come out here and we've tried to tell you that we've got this under control. It's clear you didn't believe us, Americans and American businesses. We mean business, and here's what we're going to do. And that could be a really bad sign for markets, for folks with a 401k out there. This could get rough. So this next meeting for the Federal Reserve on Wednesday is going to be very, very important.
Quickly, Dion, in 10 seconds or under, what are the reasons behind this? Is it strictly just Ukraine? And keep going.
No, it's broad-based. We saw the BLS said this was an all-around, across-the-board increase. Housing, gas, food, everything. The rate of inflation for food was the highest it's been since 1981. Highs of 20 years or more in just about all the index,
and
just about all the components.
But in terms of what's causing it, I mean, is it the war in Ukraine? What are the reasons for this?
Yeah, it's the war in Ukraine raising food prices, putting a drag on oil prices. It's rising food prices across the board. And really, it's just U.S. businesses realizing that they can raise prices more and more and more. We saw some of those consumer discretionary stocks rise because stock investors are saying, hey, they can keep raising prices because inflation is higher. So it's across the board. It's lots of different reasons. I need way more than 10 seconds to tell you all that.
Well, that was a pretty good attempt there, Dion Rabouin. We thank you.